The Fed resumed their meeting this week and decided to take the Fed funds rate up another 75 basis points. So obviously that's having a big impact on volatility in the market right now. So the question is, where is this market going to go? So we're going to dive into that today. Stick with me. My name is Brian Cannon, and welcome to Markets in 5. So before we jump into one of my favorite indicators I'll share with you, I'd like to just give you a quick update on the market. So, I've talked about this wind-up period now for a while, and the fact that this consolidation between various levels of resistance and support generally will break to the upside or to the downside. Now, it's very, very common for a support to be broken and then have it turn around and whipsaw and swing right back up, or vice versa. Kind of, you have a breakout to the upside and then it turns around and reverses. Those are called head fakes. So I want to be very careful before we just start throwing everything to cash. We've definitely raised some cash. We've definitely raised the alert level of what we're watching. But I would say if this market can't recover in a relatively short period of time, I'd say over the next several days to a week or so, and can't really turn a corner and start to head back up, I would fully anticipate at least a double bottom. And if that is the case, it's call it another 3.5% down from the levels we're at, and that's if it holds. If it continues to drop, it could get worse. So we manage risk by taking risk off the table, and we've done so, and we'll continue to do so as this market continues to find its footing. All right, one of my favorite technical strategies I like to use to kind of determine should we be in a stock or be out of stock. Is the stock heading in the right direction or heading the wrong direction? And I ran this example for a client recently, and I think it just becomes very evident when you start to look at it. So I'd like to just spend a few minutes on this chart so that you guys can understand what types of things we're looking for when we pick up a stock. And do we get it right all the time? Absolutely not. And when a stock trends, it's a lot easier than when a stock just kind of goes sideways and consolidates. So in this situation, when the RSI is above 50, generally speaking, you see a stock that's trending healthily on the way up, right? So in this situation, the RSI jumped above 50 and kind of stayed up there. It was overbought, and you can see when it was overbought and started to come back down, the stock basically consolidated by going sideways. So then the question is, does it break up and continue, which it did, or does it break down and break below that 50? Well, in this situation here, it broke up before getting overbought again and then dropping back down. But on this drop right here, not only did it break down below the 50 on the RSI, it also took out several levels of moving averages. So it took out the 20-day moving average, the 50-day moving average. So that's a very, very strong clue that this trend has turned. And so it's probably a good idea to go ahead and take profits at that point and move on. So when the stock now trends down below RSI 50 consistently, then it just basically loses its momentum. There's no strength in the stock. It's heading the wrong direction. So it's not a stock that you want to really try to, they always say don't catch a falling knife, right? This is a perfect situation. If it's just going down and there's no incentive to jump in, then don't do it, right? So you can see here on this blue line right here, it did actually pop up above the 50. However, it could not get above the moving average there, the 50-day moving average. So we would not be buyers in that situation, and it continued to drop and stay in the lower levels. Now, you can see here that it did actually pop up right here. Not only did it pop up, but it took out the 20-day moving average and the 50-day moving average and started heading the right direction. So that would be a really good indicator as to good time to pick up. So the stock's been beaten up, and in addition to that, you can see that the MACD in this situation was rolling over, which is kind of a warning sign, right? You had the cross to the downside, but then when it got into negative territory, then that kind of confirms that trend is not good. and it stayed down there until basically there was a cross to the upside here. And then once the stock kind of bounced up and got back into positive territory on the RSI, it also followed through and confirmed that move with the MACD rolling up. So now, where are we at? The stock is back down below the 50, so that's your warning sign. It did not hold the 50-day or the 100-day moving average, so it's below all of the moving averages. That's your next warning sign. We do have some minor support here, and so we want to know if that holds, but the MACD is now turned negative as well. So I would say the weight of the evidence would suggest that this stock is not headed the right direction. So hopefully this gives you a little bit of sense as to kind of the detail that goes into when we're picking stocks and selecting stocks for portfolios. We want to find the ones that are trending the right direction. And again, can they whip up and whip down and we're wrong? Absolutely, it happens all the time. But what we want to do is catch those major trends either up or down. So as you can see, we use a lot of various trend following and technical strategies in order to help gauge the amount of risk that we want to take in the market. And again, it's a little difficult right now, and we've raised some cash, and we're watching it closely, and we'll continue to raise cash as necessary. But at some point, we will put it back to work, and possibly at much lower levels. So we're watching, but if you have any questions, give us a shout, and I'll see you on the next Markets in 5.